Hello and welcome back. This is David from the Personal Finance Squad. Thanks for joining. We just went through section 2.1 where we went through the basics of mitigating transactions, meaning for every credit there's a debit, every debit there's a credit. So what we're saying is that Jasper went to the restaurant and spent $100. That means $100 went out of his account and that $100 needs to be taken out of his budget. So therefore, we wash the transaction out. So now what we need to get into is section 2.2 is adding tracking columns. So when we build this budget out, we need to have projections and actuals versus what is left or the remain. So we can see here that the $100 that we were speaking of is right here for this example. And then let's say Jasper spent $65 at the restaurant, and that means he has $35 remaining. Now, this remain column is going to be a big staple to managing the budget. This adding up all these expenses and the ones you don't see here through a given month are always going to show what's remaining, what is owed. And that needs to be marked against income remaining depending on where you are in the month and with what is left in the bank. So these two items are added up and then they go against what remains. In practice, that means in our budget we should always have a zero balance. Now, figuratively speaking, they can be up or down a little bit, but again, we're about predictions. We should always stay within a small margin of error. But we build it so that, again, every item in your budget is tracked for income against the expenses coming out, and it should be a zero balance in theory when you start every new month. And by the time you end a month, you need to be at zero. And that's what we're saying here. So, for example, dining out. Let's say Jasper did not go out for the rest of the month and eat. So he actually has $35 left over. So in that case, he'd be a little bit over what he projected in terms of having extra cash. So really, he came under the projected amount. So then he could do something with that money. Now in other cases, the phone bill could have been $5 higher like we see here. So maybe he needs to take $35 here and say, well, I'm going to take $5 out of that to balance this out. This is what we keep talking about, the principle of washing things out, getting it to a zero number. And we will certainly get more deeper into this as we get into more videos / chapters. Okay, so the other thing we want to talk about is spending money. We call them leftovers, whatever you want to use them as. That's a term we kind of use a little loosely in the squad, but the whole point is that means that money is there for you, or Jasper in this case, to use any way that he wants. What it is saying is that after all the expenses are accounted for, that means there is, in this case, $703 left over to spend freely. So there's no bill that is marked against it. So you have two options. You can either say, I'm going to make a separate tracking spreadsheet. So for example, if my budget's in Excel, I might have a tracker if I chose to, just for spending money. And it would look like you see here. And we see the flowers, the baseball game, car wash, and the current balance is $568. Now, that means $135 has come out, and that needs to be reflected in the budget, which will be down here. So you can see that where it's bolded right here, that $135 is taken out, and that means $568 remains. And so that aligns up right here. Again, that's an option. Now you could do it another way, and that's the way I typically do it, is I just go spend my money. I know that when I look into my bank account, I know the items that are not a typical expense, like a car payment, right? We know that's not spending money. So anything that's not considered spending money as a category, that means it comes off the spending. So in my case, I would just say I know that none of these apply. That means it has to come right off this right here. So really my budget would look more like right here. I just go find out and I just keep adding this number up right here and I build it up until this eventually reaches zero, or as long as I don't hit zero, I'm good to go. So again, this is your option. Some people choose to have a separate spending tracker. They might require more discipline to see what is going on with their money so they're cognizant of how to make decisions. And other people do not need it to be disciplined. The whole point is, again, use what works for you so that you stay consistent and you manage your money properly. Okay, so that's going to end it for this section. And the next section is 2.3, where we get into the credit card. So we know that most people carry one and they charge on it, and that means that's really its own separate account. That means items out of there need to be tracked in the budget, so it's in another layer that money needs to be managed, but it's very important because we all know how crazy and how dangerous credit cards can be. So we were going to go through how to manage that, and we will not have a problem because we are in the squad. Okay, so we will see you there, and thanks for joining.